Everybody, this is Jim at SP500chart.com. It's about 10 minutes after 4 on May 7th, 2014. It's time for us to take a look at the chart, and this time, I promised you yesterday, no more whining. So I'm not going to whine. Instead, let's just take a look at the chart, see what's up, try to call it as objectively as we can. And I want to remind you before we do that the website and the video are for educational purposes only. Nothing stated at the side or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional, just a guy who draws lines on charts. So let's take a look. Super quick recap. You know this already, but for close to 10 weeks, the S&P has been range-bound for all but about 5.5 days, where it peaked over 1884 or when it got below 1840. The rest of the time, we've been stuck between 1840 and 1884. Maybe even call it 1885. We got over it a little bit here, but that doesn't count. That was all just really noise. So this is what we're trying to break out of. It looks like we tried to do it here but couldn't. Then the market said, well, maybe we want to do a downside breakout, but then said, no, that's not right either. Let's go back up. So we are there again. And if we look at what took place over the past couple of days, I made mention that it looked like the last time we came off of this 1880, actually it was 1885 at that point, the last time we came off of that, it looked like we were kind of in a descending wedge. Now, that wedge shape broke out early this morning, but then we had a quick give up of about 16 points. Not quite 1%, but close to 1% in short order. And I think I know why that was. I don't think it was time to break out. Okay, we later did break out, and we later finished up above this pattern. But breaking out there on the open was premature. And if you'll notice, the degree to which we broke out over that top line is almost exactly the same degree that we violated the bottom line when we came back down. I just think that's kind of interesting. In other words, we were kind of in this little oscillation here, but the rubber band got pulled tight and let go, and because it was a little tighter because of that opening momentum, I think that just kind of kicked up a little motion in the markets. Now, here's the kind of interesting thing. You'll remember that back a couple days ago, I pointed out that it looked like we might be dealing with kind of an inverted head and shoulders pattern right here. Left shoulder, head, right shoulder. And that pattern looked like it broke out, but then quickly failed. Now, why do I point this out? Well, it sure looks like we got sort of the same thing going on in almost the same, with almost the same timing, where before we had this little neckline at about 1883. Now it looks like we got a neckline at about 1876. And I'm going to go ahead and throw it up there, but I'll remind you the last time we had one of these that looked like this, it did not do what it was supposed to do. Now, if this one were to behave and accomplish its goal, then that should be taking us back up to challenge 1890. But there's something kind of interesting here I need to point out. Even though this descending little wedge here resolved to the upside today, if we take a look at the 30-minute chart, you'll see that we have a trend line under here that I'm going to make red. The reason is that trend line could be running interference with anything this little pattern wants to do here. If we believe the tendency of what charts like to do, this line should be resistance. Now, I mentioned yesterday that if we got over this wedge, then I thought we would likely be mounting another attack on 1884, 1885, that same range here. That could, I think that's probably still going to happen. But, sad to say it, and I'm not going to whine about it, if we get up there and we tag this line at the same time, the chart says we should fail to get over that again. So I'm not going to whine about it. I'm just telling you that's what appears to be in store if we do continue this back test on this red line. We would expect that back test to hit resistance at this red, what used to be support, but what is now going to be, in all likelihood, turned over to resistance. I'm going to throw one more line up on the chart just for jollies. We're going to take this top and this top, and you will see that we also ended right at about this resistance line as defined by these last two tops. If we snap a parallel line here, gee, isn't it funny how that just works out? That also defines these two bottoms. So, in the bigger picture, we could be forming between these two lines right here. We could be forming a potential flag pattern here that could still have a bullish outcome. So I'm going to make those two lines green. If we back out on this on a 30-minute chart, then you'll see what I'm saying, that we came off of 1820, we came up, and now we just need to go, maybe we just need to go sideways to down a little bit before we can mount another effort on getting above 1884. And again, I am looking at a close over 1900 as being the signal that we are heading to the mid 1900s. Right now, however, the task at hand is to see if and when we get over this green line here, and if we do, what happens when we approach this red line. If this inverted pattern right here has anything to say about it, we break this line probably tomorrow. But we've seen this pattern before, and we saw it fail before. So I'm not going to put a whole bunch of faith in this, but it's still worth pointing out. There, you see, it looks almost like the exact same thing. So, guys, that's your video for the May 7th, 2014. I appreciate you taking time out of your day to watch this. Eventually, this gets sorted out. But hey, I'm not going to whine about it. I'm just going to look at the chart and say, here's what should be resistance. This is also resistance. If we get over this, we'll probably run into some resistance up here where we are well conditioned to expect it. And look at that. So, guys, appreciate you taking time out of your day to watch and listen at this chart analysis. I appreciate your support, and take care. Let's see what tomorrow brings us.